It's a simple matter of fact. You cannot raise interest rates without creating a problem. This economy is so heavily reliant on interest rates to remain low, and we're realizing that today. It is in full force right now, and what I wanted to discuss, the first thing was the major slowdown that's occurring that shocks even me. The second thing is the food and energy crisis that continues to unfold, and the third is the real estate reality. All of that and more. Let's begin. I wanted to show you this right here to start. A CEO of a very large trucking software firm with decades of experience told me today that Q1 could be the worst quarter in trucking since 2008, because Q4 you're going to have those additional volumes, even though it's not looking like that's the case today. Imagine what Q1 is going to look like. We see this over and over again, creating an issue not just for the trucking industry, but everyone down the line, the manufacturers of the products, those shipping the products, those who are selling them, and who is buying them. Obviously, we're having a problem all along the line here. The busiest US port sees cargo business slowing into the holiday season, an unusual trend to say the least. Cargo volumes at the Port of Los Angeles fell for the second month in September, and the outlook remains soft for the rest of the year. You have noticed this to be the case for the last little while. Over the last few months, I've been showing it to you. And isn't this such an unusual departure from what we saw last year? It's incredible. You saw the Port of LA, Long Beach. These were just jam-packed. And then you had companies that were actually chartering their own vessels so that they can move the stuff across. You also had other ports that were generally not very busy started seeing a surge in demand. Today, however, the busiest port, one of the busiest in the entire world, is now seeing a major slowdown. Things have really changed. Look here. The port handled 700,000 20-foot equivalent containers last month. That's down 22% from a year ago. This is the lowest amount for September in 7 years. So just to give you an idea, it's not just about month over month. We have to compare this to what it was before. And it's not looking good. Okay? What happened here? Well, part of that, of course, is that they ordered way too much stuff. These companies like Walmart and Target and so on, but many believe that this is part of demand destruction. You increase interest rates, people borrow less. And you could see that here on the chart if you're interested. This is just showing us a different market, and that is the luxury goods market. And they give you different examples for different companies like Dior and Cartier, and in this case here, LVMH. Louis Vuitton, Moët Hennessy, you're showing their growth over the last several years from 2007. And yes, they did experience a dip in 2009 and another in 2020. However, the growth has been incredible for 2021. And what does it tell you? It's that people who are generally much more wealthy seem to not have an issue. And why is that the case? It's because the money is flowing into the assets. The money is flowing into those who don't need it, and it's being taken away from those who actually do. And you do this through the process of inflation. And if you want to create inflation, the best place you start with is the printing press. But we're not allowed to talk about that. Okay, here we go. Alcoa surprise loss spells more woes for the world economy. Metals have slumped as hawkish central banks fight inflation. Aluminum has fallen nearly by half from a record in March. So just a few months ago, it seems, already down by 50%. This is just one metal, but you look at it on a different scale where steel and all the different products down the line that are being essentially used to create products were very expensive, way too expensive to make any real case for it. It was ridiculous. Lumber was off the charts. And then we had a chance to catch some breathing room. And that's where we are kind of sitting today for a lot of the commodities. Some are up, some are considerably up from where they were. Why is this happening? We need to start addressing that. And the case here is when you do not have really cheap debt, people, businesses, nations do not borrow as much. And that's just the issue. That's what we're experiencing right now. with these metals, but you can look at it all across the board. Then we get serious. More than 80% of the US is facing troubling dry conditions. There's not been more widespread abnormally dry and drought conditions in the US since at least the year 2000. So this, of course, what does it do? It makes crops more expensive. It makes people pay more when they have to go to the supermarket. They are doing so and really having to cut. They're saying, well, you know what, I used to buy that, but can't do that anymore. Maybe I'll just have to buy this instead. And they're making these difficult choices, and it's really unfortunate to see that, because it's not as if they're buying, all these fancy things. We're talking about food, shelter, and energy. Unbelievable. This is another aspect. This is an article from a little while ago, but it has data that is contained within that I wanted to share with you. About 70% of capacity is offline. It's talking about fertilizer, actual capacity right now, giving you an indication of what's happening with the food supply as well. The current crisis begs for a swift and decisive action from the EU and national policymakers for both energy and fertilizer. Why? It's because of the natural gas prices. So when the natural gas prices move up considerably, that's going to affect fertilizer. And this is having an impact directly on what consumers pay for their food. So watch this very carefully. Here, we confirm that we are reducing and stopping production of some fertilizer plants in the different EU sites, and this for economic reasons. You got to understand what's happening here. This is so huge because the food prices are not going to get any cheaper anytime soon, it looks like. Okay, the store is simply not going to bring their prices down. While you might see the raw commodities fall, generally when you go down that line, consumer always pays more. The National Energy Assistance Directors Association says energy costs will be the highest in more than a decade this winter. This is for the US, by the way. The Energy Department projects heating bills will jump 28% this winter for those who rely on natural gas, used by nearly half the US households for heat. Heating oil is projected to be 27% higher, electricity 10% higher. Okay, so we don't know if it's worst case scenario, best case scenario, and all that. It really depends. It depends on where you live too. Are you in Texas? Are you in New York? Are you in Florida? All these are factors. However, you as the individual or people that you know, if they are going to be paying nearly 30% more on their energy, is that going to be a detriment to their current living standards? Are they going to have to decide to wear an extra sweater because they cannot afford to keep the heat on? These are the things that we live with today. And why, oh why, when they printed all those trillions of dollars telling you that they had to fix the economy by printing this all, and people have to wear an extra sweater and extra blanket because they can't turn the heat up. It shows you how messed up things really are, okay? Look, existing home sales fall to a 10-year low in September as mortgage rates soar. That's very clear. We know what happens. You increase mortgage rates and then you slow down growth. This is just for one. Now, I wanted to make a mention right here. There's existing home sales, new home sales, pending sales. You got to look at the difference here, and I'll understand that you might see some discrepancies sometimes, but this is for existing home sales. You could see this as well. Home sales listings plunge over 20% in September, most on record, aside from what happened in 2020. There's more data in there as well. You could see it in a chart form, going back to levels we basically have not seen over the last while, okay, other than 2010 and 2020. This is another one. I wanted to break this down for you really quickly to use the example of Canada, but they also show you the UK, Australia, and Sweden. I think there's a few other places, giving us an idea of what happens when you have a very big bubble in real estate and you start increasing interest rates. That's really the theme of this all. Look here. Here's a look at some of the key developments then and now in countries where property is at risk or already in a downswing. Comparing what happened a few decades ago, a lot of the countries like Canada experienced a slowdown when we moved from the late 80s into the early 90s. And then it was basically a boom from that point, from the early 90s all the way up until present. But things seem to be changing. Canada Drive from Toronto's main airport towards downtown and you will pass row upon row of apartment blocks developed during the easy money era. That has echoes of the 1980s boom in the city driven by speculation on condos, which ended suddenly, leaving prices plunging. Then and now, inflation was on the march and interest rates had to move sharply higher to combat it. In 1990, mortgage rates topped 13% and the Toronto housing market tumbled in a deep freeze for years. Sales plummeted, prices didn't hit bottom until 1996 after losing more than a quarter of their value. So this is just one example. I wanted to show you that when you increase the interest rates, it doesn't matter. It doesn't matter if it's a country like Australia, maybe it's Canada, maybe it's the United States or anywhere else. Doesn't matter what's going on politically and all that. You increase interest rates, you create a big problem for the debt system. It's a debt-based system. But don't worry though. You don't want to worry because you've got that solution. Well, according to the World Economic Forum agenda, it's in full force here. Hundreds of schools in the Netherlands have started a campaign introducing 10 to 12-year-old kids to mealworm and insects as a sustainable meat substitute. The goal is to bring about, quote, behavioral changes through unprejudiced children. How does that sound? What would you do if that was your child? So let's take a moment to break this all down here. I want to show you what's really happening today. Everything seemed to be moving along so well in 2017. And then 2018 happened. Remember that? I was covering each day here on this channel. Everything was just wonderful in 2021. And then 2022 happened. What was the difference between these? What was the similarities? Well, if you look at interest rates rising and quantitative tightening, both of these things started to happen when the markets started to fall. Is it a coincidence? Some say, yeah, it's just a coincidence. But you see it every single time. And if you're not picking up on the pattern, I just don't know what to tell you. 2017, over and over and over again, every article, Goldilocks, Goldilocks, they keep saying this thing. And then 2018 happened, quantitative tightening and all that. The biggest driver of economic growth is debt. As debt becomes more expensive, less borrowing and tighter credit. You want to buy just as that credit is loosening. That's the big indicator that it's a little bit more difficult to discern, but it's absolutely the one we should be paying attention to. Uncertain times require more diversification. So you got to look at your portfolio, your assets, or what you have, and start to say, maybe it's time to, normally I would purchase this every month. Maybe I should be putting a little bit over here now. Don't get rid of that, but just put a little bit over here now. That's the way we should look at it, or should have been over the last while anyway. And more effort and knowledge. Okay, because we got to spend every single day working on ourselves, working on our relationships. That's one thing that we should be doing that we just generally don't. Okay, take the time to find somebody new that you can align with, that has a skill that you do not have, and you can really have a mutual relationship between the two of you. Did you find this video informative? I got another one coming for you tomorrow. You definitely don't want to miss it. Hit that subscribe button. I'll see you tomorrow.